In today's video, I'm going to teach you how to down payments from customers' job deposits explained in QuickBooks Online. We're going to walk through a simple, clean way to record a customer's deposit directly on an invoice in QuickBooks Online, and what that actually does behind the scenes in your books. This is especially useful if you take a partial payment upfront for a job, like a 30 or 50% deposit, and then collect the rest when the work is finished. Let's start from the very beginning. First, you'll want to create an invoice in QuickBooks Online for the full job amount, not just the deposit. So imagine the total job is $1,000. Even if the customer is only paying a portion right now, your invoice should still reflect the entire $1,000, so the full value of the job shows up as income and as a receivable. Once you're on the invoice screen and you've added your customer, date, products, or services, and the full amount, scroll all the way down to the bottom of the invoice. There, you'll see a field labeled Deposit. This is the key field we're going to use. In that deposit field, type the amount the customer actually paid up front. Using our example, if they paid $300 as a deposit, you'll enter $300 there. Right next to or below that amount, QuickBooks will ask you which account the money was deposited to. This should match where the funds actually went in real life. If the payment is still waiting to be grouped into a bank deposit, you might choose an account like Payments to Deposit or Undeposited Funds. If you know it went straight into a specific bank account, choose that bank account instead. The important thing is that the account you select here matches how you handle customer payments in the rest of your QuickBooks file, so your records stay consistent. After you've entered the deposit amount and selected the correct account, go ahead and save the invoice. When you do this, a few things happen automatically in the background. Your cash or bank account increases by the deposit amount you entered. Your accounts receivable increases, but only for the remaining balance that the customer still owes, not the full job amount. And your income increases by the full invoice amount, which reflects the entire value of the job. This method keeps your revenue accurate, shows exactly how much the customer still owes, and properly records the upfront cash you received, all from one clean invoice.